Hey, my name's Titus. Welcome to Let's Build Success Together. Thank you so much for watching. Today we're going to talk about, is the stock market crashing? Stay tuned. Yes. No, I'm just kidding. Okay, so is it crashing? Let's talk about it. So, first off, when talking about the stock market, you hear a lot of words that get thrown around, like bubble, or market corrections, bubble bursts, different stuff like that, undervalued, overvalued. And we'll talk a little bit about that today. So basically, whenever people talk about a market bubble, what they mean is the market itself is not worth the money that's invested in it, or the value of that stock. Normally, people are willing to pay $15 per dollar per share earned. So anytime a stock is above that, so let's say the stock is earning $2 per share, but the stock is bought in at $50 a share. Well, knowing that $2 equates to $30, being that again it's about $15 per $1 earned per share, you can basically equate that stock is overvalued. So basically that people have run the price up and it's probably going to fall. Now, it doesn't always fall. A lot of times you still see that stock continue to rise. Now, when that happens at an alarming rate, they call that a bubble. And they call it a bubble because it's easily popped. And a lot of people that end up investing, similar to like the Bitcoin and all that stuff like that, not saying that was a bubble, just saying when they're investing into it, a lot of people are very fickle. They're afraid. They're not really investing, they're more speculating. So they don't really know what's going to happen. It could go up, it can go down. When people are investing, truly investing, they believe in it. So when they put their money in, they don't have to watch their money. So when you're investing or when you're more speculating, you have to watch the money because you don't really know. It can go either way and it can go fast. And you're not really tied to that stock either, so you can be very afraid if it does start to go up or down. Once enough people start investing in something or speculating on that same something, it becomes a bubble. Because really the only reason they're getting in is in the hopes that eventually someone else will want to pay more money for that same stock. So if I paid $20 for it, I'm hoping that one day there will be a greater fool, is what they call it, that's willing to pay $30. So I know the stock might be overvalued. I don't care. I'm just trying to make a quick buck. Now, there are a lot of people that are getting in trying to make the quick buck. Then you have some people that are investing because they think it's a great company. And then you have the speculators. And the speculators are really what can drive a price down quickly. Because the more of them that get into it, from hearsay of a friend or a family member or whatever, the more people that get into it, the quicker that stock can plunge. Whether or not the stock market currently is a bubble is still yet to be said. I mean, it's hard. It really is hard to tell. There are a lot of stocks that are falling because of how much speculation there is. One thing that I've noticed is just about every 10 years you'll see people, it's almost like a self-fulfilling prophecy where people assume that something's going to happen, therefore something does happen. And it feels like that's what we're in right now. And quite possibly it can go on for quite some time. It can go on for a very long time if we let it. And it really comes down to how afraid we get. The more it falls, the more afraid we get, the more people start pulling their money, the more the stock drops. And that can go on for a very long time before actually correcting, because the correction part of it can happen both ways. In one way, the market can correct itself if there is a bubble, the bubble will burst. If the stock is just overvalued, then there's normally going to be a market correction, in which case the stock will go back to a normal price and it just corrects itself. It's not normally as intense as a burst. A burst is very quick, it happens fast, and you lose huge percentages of your money. A correction can just be you see this start to fall a little bit, people panic, but then it goes back to where it is because enough people are invested. And really that just comes down to, a lot of times it comes down to the media, it comes down to a lot of different things. Whether or not we're in a bubble, it's hard to tell. A lot of times when you start to see stock prices go up, especially with like the Dow, and you hear that a lot, it's just an index fund that shows all of the stocks kind of put together how well they're doing. So when the Dow's going down, that means as a whole, a good rule of thumb, that means is if the Dow's going down, then most stocks are going down. If not all stocks are going down as well. When the Dow's going up, stocks are doing really well. So normally when you see the Dow start to go up, the value of a dollar actually starts to go down. It's almost a mirror image because a stock becomes more valuable than a dollar. It's paper. It really is a paper currency, if you will. And once you trade it enough and it gets accepted enough, it becomes a currency of its own, similar to like Bitcoin. Anything can become a currency if everybody agrees that it's worth something. So as the stock market is being traded, or as these stocks are being traded, the dollar becomes less valuable because the stocks are worth so much more. So if you could have bought, Bitcoin for $1 a year ago and now it's worth $1,000, well, now the dollar can actually start to go down. It doesn't happen with Bitcoin, but with the Dow it does because it's such a large market. And there's so many people investing. And I mean, in the stock market, it's a world currency where everybody's trading in the stock market around the world. So as that starts to go down, people, don't need currency as much, in which case the currency can go, or as that goes up, people don't need currency as much, so the dollar can go down. So history does repeat itself. I don't know that it's crashing yet. It's hard to say. When you're investing in it, it's definitely scary and easy to become afraid and pull all of your money. I would say if you want to be safe, it kind of comes down to what you believe in. I can't really make that call, and I don't want to make that call. But personally, just because you guys follow me, what I did is now I hold very small amounts in comparison to what I held before. Very small amounts of the stocks that I hold, so that my risk is a little bit less, and I'm not out there as much in case it is a crash. Because I still want to have I want to have a lot more cash if it is a crash, because you got to think as things become cheaper, if things start to go down and it gets cheaper, I want to be able to buy in at that cheaper rate. So I got to have enough cash to be able to do that. Briefly, what caused this is basically when a lot of different things, but the combination is really what is the kicker. First off, it's been 10 years, so again, self-fulfilling prophecy. People see it as another impending doom, if you will. So with that being said, a lot of people are buying in on speculation, just thinking it'll go back up, but if it doesn't, they're out as soon as it happens. Then you have the fact that for a lot of corporations, when Trump actually reduced the tax bracket, it caused a major difference in their earnings per share. So some were a lot higher earnings per share and some were a lot lower. But the problem was a lot of the companies that were a lot lower ended up reporting first, which caused even more of a panic. As these stocks are starting to drop, people are like, these are major companies and I'm losing my money in them. It's almost like money's not safe anywhere. So eventually Trump releases the memo and all kinds of stuff like that, which also causes a major panic in the market. And it just so happened, everything put together, along with a few other things that I'm not really interested in getting into right now, caused the market to just start to fall. And really, once you start fearing the fall happens a lot quicker. The first day that it fell, it was only like 600 points and everybody was freaking out. And then it's 1,600 points because the first one happened. If that first one had never happened and the media hadn't promoted it the way it did, it may not have seen the 1,600 points. And it's possible that tomorrow it's 2,400 points, and it keeps going because it is that ripple effect. So if you pay attention, you may be able to hold your cash and get in at the right time and be able to make a profit because you get better the next time around for the next 10 years, if you will. And it's possible this can last for a very long time, but there's always ways to make money in between, so it's nothing to freak out about. Just pay attention. What does that mean for us? For our team, building success together, it doesn't really mean much other than you really got to get more in tune with what's happening, what happened in the past and what's going to happen in the future. You have to find investments that have paid off in the future, whether that be courses. It could be just holding a course that gets you that cash flow that you need, or buying more rental property if that's possible, as opposed to flipping houses or looking into apartment complexes. As interest rates go up, you start to see kind of a big shift in whether or not prices are going to go up or not. So we only can hope for the market, but knowing what you're doing and paying attention to the past can really help you succeed. So good luck to everybody. Thank you for watching. Let's build success together.